Hey guys, it's Rahim. Welcome back to my channel. If you're new here, smash the subscribe button because I talk about property investment, personal development, and how to gain financial freedom. In this video, I'm going to share with you how to spot emerging property deals before they go boom. If you want to know how to get succulent, greater return on your investment in every property you buy, this video is for you. For those who don't know me, my name is Rahim. I'm a property investor. I started my property investment journey just over 8 years ago because I was in a job where I was undervalued, underappreciated, going nowhere. I fed up of it, I hated it, and I decided to take my finances into my own hands instead of relying on my employers. I started by renting properties out from landlord and subsequently rent those properties out on a room by room basis or on a nightly basis. The money I made from those investments, I used to buy my own investment properties, and I was able to build that to a multi-million pound property investment portfolio. And today I've got my estate agency, a renovation company, and now help professionals like yourselves to use property as a vehicle to make passive recurring income. So I hope that earns the right to talk to you how to determine an emerging market before the boom so you can actually get greater return on your investment. So before we get to that, I'd like to thank everybody for subscribing to my channel. The channel is growing immensely. Thank you, thank you, thank you. I wouldn't have sat on this chair today doing this video without your support and your encouragement. I can see the comments, the likes, all of that is making the channel growing immensely. So thank you. Thank you, thank you, thank you, and I'm very honored to be part of your family. So for those who have not subscribed, if this is the first time to hit this channel, please, I would like you to hit that subscribe button now to join the family, and I will make a promise. I will ensure I provide you valuable, actionable content to take your property investment journey a little closer to financial freedom. And that is a promise from me. And whilst you're there, like and share the videos to friends and family. So how do you determine or how do you identify emerging market trend before it goes boom? One of the first things you want to be thinking about is monitoring infrastructure project. What do I mean by that? It's looking where there is a development, redevelopment, or regeneration going, such as transport link, shopping center, or business parks, which ultimately can provide a driving force which can drive future property demand as a result of the regeneration, as a result of having more employees in that investment area, and a result people wanting to visit or wanting to go and see whatever had been done in that town or city. You may be thinking about Leeds, for example. You may be thinking about Liverpool, for example. There's a 5 billion waterfront project currently going on in Liverpool. In 3 to 5 or maybe even 10 years, you'll be laughing because property prices would have gone up significantly. And the government or businesses are realizing that now. They don't have to be in London to make serious return on their investment or to be able to represent their shareholders. They're starting to move in these smaller cities where renting is cheaper, which also people are willing to work remotely, and also areas where people feel quietness and it looks like very relaxed and people are not worrying about all these noises or travel cost in the first place. And the second way to spot emerging property market is tracking local government plans, keeping an eye what your council is doing, especially for urban development, regeneration project, and investment initiatives, because Labour promised to do so many redevelopment. They're going to be extending the green belt, and they're giving brownfield acceleration in terms of planning, and they're going to be creating another band as well, which you call grey band, to allow people to redevelop houses. And guess what? People start moving in those investment areas. So if you're buying houses, you're buying lands, or you're buying development project in those areas, it would only expedite the level of your return. Next, analyze economic indicators. Examine economic indicators like employment rate, business investments, and economic growth in different regions within the UK. So you may be thinking, how do you determine that? How do you understand even what these things are, or where do you go and look for these things? There is a website, the National Statistics website. You can go and search for whatever you want. You can search for population growth. You can search for development growth. You could even search for employment growth to learn and understand that investment area, to understand whether that investment area has got those potential. Because what you could, when you look at the graph and look at the information or the data, it can kind of tell you from historic data. You can look at it in like the last 5 years. What had happened in that city in the past 5 years? You look at that and you can kind of determine what would happen in the next 5 years as well. So that way then you'll be able to understand whether that city, town, is the best place to invest to ensure that you've got that wave when it comes along the way. And also assessing property trend. Research towns and cities that are having increasing property prices and higher rental demand, as well as higher rental yield. Now, when you determine those cities, you don't go and start buying properties in those towns and cities. So what you don't want to do, you want to invest in towns and cities that are beyond the city that's already doing really, really well, that property prices are going up. Because what happens, once that city or town hit that ceiling and it start dripping to the next town and city, it start dripping to the next town and city, and then it becomes a wave. So if you're in the next town and city, after that city, then you are at the bottom of the wave. When these investors start looking, when people start moving in that city, when it becomes bottlenecked, and it will slowly go to your city. And when it hits your city, then the property price goes up like that. And then obviously that means the capital appreciation of your property would have gone up, as well as your rent, by the way. Finally, observe population movement. Now, where are the people moving to? Which city or town is having the highest population growth or influx of new residents, lifestyle changes, or affordable housing option? You see, London has become so expensive. London is becoming so expensive that people are moving out. The people I knew, literally 80% of the people I knew that used to live in London have moved out of London because it's gone so expensive. They're looking for somewhere cheaper. They're moving to other cities like Birmingham, Manchester, Leeds, Liverpool, Derby, Coventry, moving to those cities. So if they move into those cities, guess what? The demand will be following as well, because there will be lots of people moving. As a result, property prices will be going up as well. So go on National Statistics website, try to learn and understand where this trend is happening, and try to go there before the wave starts. So if you're struggling to get the National Statistics website, I will leave the National Statistics website on these videos. All you can do is to click on it to go and do your research. And let me know on the comment section how you're getting on. I really hope this video has been helpful. If this video has been helpful, smash the like button below, subscribe to my channel for more amazing videos. I look forward to sharing the next one. Thank you.